This is Monica Main again, and congratulations for making it to round two. I'm glad you made it this far with me. I'm going to reveal to you what this strategy is to be able to invest and retire within 9 months. So I'm going to go ahead and get started by showing you what I have in mind for you. Now, I have a very strong belief in investment real estate to be able to generate a passive income for you. Now, hear me out. I'm sure you've heard some of this before, but I think when you think of real estate, you might be thinking about different types of real estate, including getting real estate to flip it and other methods to be able to use to get rich or be able to make an income with real estate. But I have a different type of strategy when it comes to real estate. Number one, I first of all believe that real estate holds the most value, constantly appreciates no matter what happens in the economy, and can give you a monthly passive income for life. Number two, I believe solely in investing in residential commercial real estate or apartment building real estate. I believe this is the best investment strategy that you can take because it does tend to be able to go through any kind of changes in the economy and still you can make a lot of money with residential commercial real estate. So basically what you'll be looking at are units, buildings of 5 units or more to be able to qualify in the residential commercial category. And number three, this type of real estate is easy to manage, especially when you have the right management company in place. So it's not something that you have to spend a lot of time doing. You actually don't have to go out to the property and manage it yourself. You have a property manager that takes care of all of these things for you. Now, it's a very simple process. You find a cash flow property, you analyze the numbers, you purchase the property, and then you hire a management company to handle all the aspects of the managing of the property. So I'm going to show you how easy it is to find a cash flow property and how to analyze the numbers very quickly so you can see that it's not a very difficult process at all. I think many times different professionals in different fields believe that things are a little bit more difficult than they are. And so it's what stops them from actually proceeding and doing something with it. And I will show you very clearly and simply that it's very easy to start the process doing this. Okay? Now, one of my favorite websites to find properties is a website called loopnet.com. And there's a lot of commercial real estate. It's a commercial real estate MLS site. And it's basically one of the main sites if you want to find commercial real estate for sale. And so I basically did a very simple search on Houston, Texas for multifamily properties for sale. And I'm going to go and give you an example of a property that might be a really good cash flowing property for you. I'm going to go ahead and click on this one here. It's Bennington Apartments. I'm going to briefly show you a little bit of the details. Obviously, there's the asking price here, which 99% of the time you're not going to be putting in your offer at what they want, obviously. It has 16 units. It gives you some of the information about the property. The occupancy level is a little low. It's 44%. But for the purposes of showing you how to get a cash flow, I'm going to show you how this works very quickly. Here's some of the numbers that you absolutely need to be able to work your cash flow analysis. And so I'm going to show you using my template, my cash flow evaluator, which is an Excel spreadsheet, exactly how to do the process of finding the cash flow and to quickly be able to assess whether or not this is a viable deal to do or not. So I'm going to go ahead and move over here and show you a little bit about how my cash flow evaluator works. So I'm going to go ahead and drag this over so you can see it. And basically it's a very simple Excel spreadsheet, but it's very, very effective in helping you find the numbers on any cash flow property. So as you can see, I'm going to make this a little bit wider to make sure that we can go between the property and the analysis that we're going to be doing. So we have this information that we have to fill out, and we have to focus in on the yellow boxes here. So we have the purchase price, which is $355. So we'll go ahead and plug that in. Now I have a specific broker that allows you to put 15% cash down and they'll fund the rest. And so basically they cover an 85% LTV or loan to value on your property deals. And so your initial investment would be $81,000 for this particular property deal. And we're going to get rid of all this other stuff because you're not going to have a second and a third or anything like that on here. And so go ahead and change this. And then we're going to get our gross rental income from the actual property analysis here, which is located down here. We're going to use the effective gross income, which is $99,249. So we're going to plug that in here. Okay. And we're not going to worry about filling in this section here yet. We're just trying to get a quick and dirty analysis of exactly what we're looking at here. And then we're going to focus in on this other yellow box for a gross amount for your operating expenses. You're going to take this amount, this $53,626 amount. Okay. And we're finished. And here you go. It's green. If it was a negative cash flow property, it would have turned red, and I'll show you. I'll just add an extra digit here. You'll see that it's red if it was a negative cash flow. So we're going to go ahead. It's green. So we're going to take a look. We have a cash flow annually of almost $15,000 a year and a monthly cash flow of $1,200 a year. Okay? So that is basically a very quick and dirty analysis of this particular property to see how much of a cash flow you'll get for your investment of $81,000. Okay? And so that's pretty much it. You pick up however many of these that you need to be able to cover your current lifestyle, whatever amount of money that is, whether it's $15,000, $20,000, $30,000 a month, whatever it may be, and you just simply pick up the amount of property that you need to be able to fill in exactly what income you would like to be able to continuously get as a passive income on a monthly basis for your retirement. And you can continue to do this as you go along. Now you don't have to constantly keep shelling out for the 15%, because I will tell you that after you purchase this property, you can go ahead and borrow against the equity that you would have in this property to be able to apply it into another property so that you're not constantly having to come up front with all of these different down payments for the different properties that you're acquiring. And now is the time especially that you'd want to get involved in real estate, because you can get a lot of property below market value as in no other time in the economy. So if you want to do this and you want to seriously consider retiring and getting the best bang for your buck on different property deals, now is the time to get involved in this. You do not want to wait around, just wait till the economy gets better and then all of a sudden you're not able to get really good deals on properties. Now the nice part about this particular tool is that I have other tabs to be able to show you exactly where you should be. You should be at about $25,000 per million in asking price in bottom line cash flow after debt service, which is your mortgage, and all expenses on the property. And you can see your asking price is $355, and you actually could support going up to $591 and an asking price on this property, which obviously you're not going to do. You're not going to give more on the asking price. But this is a good sign here because it shows that this is a really strong cash flowing property. And so that's another tool or part of this cash flow evaluator that can show you exactly, okay, where do you need to be? And if you needed to offer something lower, this would actually show you what the lowered price would have to be able to get your $25,000 per million in asking price for your basic cash flow that you'd like to get. So if you want to know more information about exactly how to make this work for you, including different strategies and techniques that you could use to make this as easy as possible to be able to acquire as much property as possible, go ahead and click through to get more information so that you can go ahead and get started building your own real estate empire and getting out of the rat race for good as soon as possible.